Good morning. Apple reported its earnings after the market closed last night, and while they tried to put a good spin on it, well, shareholders were just not satisfied. The stock sold off in the aftermarket almost 8%, and it's still down this morning. Joining me now is David Nelson. He's the chief strategist over at Belpointe Asset Management. So, David, let's go over the numbers and why investors aren't happy.
Well, it was an inline quarter, and that was okay, and the guidance was poor, but we can put that aside because guidance with Apple is always bad. When you look at the iPhone numbers, that was well beneath expectations, 51 million. Now, I know that sounds like an enormous number, but this is a huge company, and it takes a lot to move the needle. And I think what investors are going to come away with this is that Carl Icahn is right. This is about the buyback. They have an obscene amount of cash, and investors are going to want this money back.
All right, so when we look at the earnings, they had earnings per share of $14.50,
right? And
they beat last year's.
Yeah.
They really talked about the number of iPhones they sold. It wasn't too shabby. I mean, they sold 51 million iPhones.
It's 51 million, but let's dig down into the numbers a second. Okay, so it looks like earnings are growing, but when you look above that EPS line, you can see that if you back out the share count reduction, earnings didn't grow at all. 13 billion net profits this quarter, 13 billion last quarter. So it is about the buyback. So with all this cash, and it's a huge level, you know, unless they have some secret project and they're building computers under the earth and we're going to use our iPhones to transport ourselves around the country, they need to return this money to shareholders. The only other thing they could do is possibly buy up some of their suppliers and grow vertically, and I don't think they're going to do that. I think.
What about the iPayments? They're talking about this payment
that could be big,
processing.
But that's another incremental move, and I think that's great. And I think this is a wonderful company, but it is not the growth company that we knew, you know, a lot of years ago. And I think what we're seeing right now is those shares are being transferred. Growth investors are selling and value investors are buying. I think it's got a spot in your portfolio, but it's not in the growth side.
All right, so when people look at Apple, everyone loves to have it in their portfolio, but people were used to buying Apple and seeing it go up $100.
Yeah.
You're saying that's not going to happen anymore, not at that level.
It was a lot more fun a couple of years ago when it was at 300-400 on its way to 700. The stock is always cheap. It was cheap at 700. It was cheap at 600, and it's cheap at 400, and it's cheap at 500, about where it's probably trading right now. I don't think that's what this is all about. I think the growth is slowed, and investors are trying to come to grips with that. I think, you know, let's really let it out in the open here. A few years ago, they introduced the iPhone. They absolutely caught the technology world. They killed it. They caught the world with their pants down. But now the world is starting to catch up. They have a lot of competitors. I think they're playing not to lose. They're not playing to win. They're doing what big companies do. They're going to make incremental moves here on out.
All right. Well, it seems like Apple is no longer the sure bet that it used to be. We thank our guest, David, and I'm Debra Borchardt reporting for TheStreet.